Super Microcomputer on May 7th, stock closed at $819 level. So basically slightly negative after reporting earnings a few days ago, testing the $700 level and bouncing off of the support again. The stock right now basically almost filling this earnings gap down. So this gap was from 860 to all the way to like 750-ish level. So almost tried to fill the gap. But here's what I'm watching for SMCI. So volume has been drying up. If we take a look at the daily chart, I'm still watching the stock in this downtrend right now, right here. So for the past like 2 months or so, you can see this is your resistance trend line where stock has been making lower highs, lower lows, but this 700 has been acting as a support. Last time when it before joining S&P 500, where it made a pretty flushing move, this was the level where it bounced as well. So watching this pivotal level, because if it does lose at some point this $700 level, very likely it will test its 200-day moving average, which is above $500 levels right now. But right here, right now, well, this resistance, let me extend this right now, this downtrend. I'm going to be watching this level, which is, well, depends when it's going to push to these levels. But ideally, you want to see, if you're bullish, this name above its 50-day SMA, which is at the moment $940 level. So volume is declining. They reported earnings. The only thing that can ignite the whole semiconductor sector right here, right now, is only Nvidia, which is the big dog that hasn't reported earnings among all of these names. And if it does break out, maybe you will see it. But right here, right now, SMCI, yes, it has pulled back pretty big from its highs. But if you take a look at, let's take a look at the heat map, like in, technology, computer hardware sector, 188% still year to date. Probably the best performing S&P 500 stock right here, right now. Like, I don't see any triple digit stock in S&P. If you just go through yourself, I mean, of course they joined later. It was Russell 2000 stock, 2000 index, but still, I mean, even if it comes down to these $500 levels, it will be outperforming. But right here, right now, everything is downtrending. Volume is lower again. I wouldn't be trusting this volume. 5-day moving average, well, it's above its 5-day moving average, at least today, and yesterday was above it as well. But it is downtrending to 20-day downtrending. So ultra short term, I will be watching this name maybe fill the gap. And after it's filling the gap, I'm basically watching this name to the downside if it doesn't basically get back above this level, or just the longer it chops here, the higher probability that people will be just getting out of this name. Because I was looking at the option activity as well. This stock was making basically most actively traded option in daily stats every single day for the past, I don't know, like past 2-3 months, right? Ever since it, I mean, throughout this run and throughout this move before their earnings again. But today, I'm not even seeing in, I mean, top 20 stock right here, highly option traded volumes. I don't see SMCI. So day traders are out. They will come in as soon as the stock decides where it wants to go, whether it's going to break out or whether it's going to break down. By looking at the put to call ratio today, 46,000 calls, 37,000 puts, could be purely just premium sellers taking advantage of this name, where this stock still has pretty big range. So for the week of May 10th, it's implying that it can move $45 up or down. Maximum pain for this week looks like $800. There's slightly more calls versus puts for this week. But yeah, that's not much happening with SMCI, so it has to pick a direction, whether it wants to break out of this downtrend or whether it wants to break below this $700 level. But we shall see. So far, I will be watching just gap fill area, another maybe 30 points from here, if it wants to push higher all the way to 860, and we'll see from there. But that's the update for SMCI. That's what I'm watching. Thanks for watching. See you in the next one.